Last year, my tax bill came back at almost zero. I called my accountant because I thought he made a mistake. He didn't. He told me the tax code is doing exactly what it was written to do: reward people who own assets and punish people who only earn a paycheck. It was these 7 assets that let me legally avoid taxes. I was an attorney whose clients held these assets. And by number 7, you will see the move the wealthy use to spend money the tax man never touches. So here's what I'm going to show you: 7 real assets the wealthy use to shrink their tax bill legally. We start with real estate and the trick hiding inside depreciation. Then a rental loophole that can wipe out the tax on your day job. We cover the income that is completely free from federal tax, and the retirement account the tax man can never touch again. Then it gets aggressive. Stick around because asset 7 is the one the ultra wealthy actually live on, and most people have never even heard of it. But before we start, I need to make one thing crystal clear. There is a big difference between tax evasion and tax avoidance. Evasion is lying to the government. That is illegal, and it will land you in prison. Avoidance is using the rules exactly as they are written. And that is what every wealthy family in this country does on purpose. Everything I show you today is the legal kind. I am an attorney, not your accountant. So take your own numbers to a tax pro before you act. All right, let me show you the first asset. The first asset is long-term rental real estate. And here's the part almost nobody understands. The government lets you deduct the value of the building a little every year. It is called depreciation. So the property puts real cash in your pocket every month. While on paper, it shows a loss, and that paper loss cancels out your taxable income. Real money coming in, a paper loss going out, both legal, both at the same time. This is the quiet engine underneath almost every real estate fortune. The second asset takes that same idea and makes it stronger. Short-term rentals. Now, normally, rental losses are locked away. They can only cancel out other rental income. But there is a rule. If you materially participate in a short-term rental, something changes. The tax code stops treating those losses as passive, which means they can offset the income from your job. This is why so many high earners quietly buy their first Airbnb. It is not about the nightly rate. It is about what it does to their tax bill. The third asset is the simplest one on this whole list: municipal bonds. When you buy them, you're lending money to a city or a state. And the interest they pay you back is free from federal tax. No loopholes, no participation rules. The income is simply not taxed. It is the closest thing to boring, tax-free income that exists. And the wealthy hold piles of it. The fourth asset is not really a thing you buy. It is how you get paid. When you hold an investment longer than a year and then sell, something good happens. You get taxed at the long-term capital gains rate, and that rate is way lower than the tax on a paycheck. But here's the part they do not teach you. There is a 0% capital gains bracket. Structure your income right, and some of your gains get taxed at nothing. This is why the rich take gains in dividends instead of a salary. The fifth asset is the one the tax man never touches again: the Roth. You put money in after paying tax on it once. From that point on, it grows completely tax-free. And when you pull it out in retirement, that is tax-free too. Every dollar of growth, every year of compounding, shielded. Most people use a tiny version of this. The wealthy use conversions to move as much as they legally can inside. The sixth asset is the aggressive one. And I want you to hear the risk as clearly as the reward. Oil and gas partnerships. The government wants to encourage domestic energy. So it lets investors deduct a big share of their investment in year one. It is called intangible drilling costs. That can mean a very large deduction against your income right away. Now, these carry real risk, and they are not for everyone. But this is exactly the kind of incentive the wealthy use. And most people never even hear about it. And that brings us to number 7, the move I promised you at the very start. Certain life insurance policies build up cash value over time. And here's the trick. You do not sell the asset to get the money, you borrow against it. And borrowed money is not income, which means it is not taxed. So the wealthy fund their entire lifestyle this way, spending money they never technically earned on paper, and never paying a dime of tax on it. That is not a glitch. It is the system working exactly as it was written. So look back at all 7. You will notice one pattern. The The rich are not taxed on what they own. They are taxed on what they take out. So they build income that does not look like income, or they just never take it out at all. Once you see that pattern, you cannot unsee it, and you start building your money differently. Before we get to that next move, I want to thank the sponsor of this video. Loss for Wealth wants to thank SaneBox. Look, you already know how overwhelming an out-of-control inbox feels, with all the emails we get every single day. SaneBox fixes that. It lets you train your inbox to sort your emails for you, saving you real time every day. It is an AI-powered email tool that learns which emails actually matter, and it quietly moves everything else out of your way. So your inbox only shows you what needs your attention right now. No more digging through promotional noise. Just to find the one message you actually needed. It works with whatever email you already use. Gmail, Outlook, Apple Mail, and it sets up in just a few minutes. There is a link in the description for a free trial, so you can see it for yourself before spending a cent. All right, now let us get back to it. Now, asset number 7 is really just one piece of a much bigger strategy. The ultra-wealthy use it to never pay tax, and to pass everything to their kids completely untouched. I broke that entire playbook down in my next video. It's called Buy, Borrow, Die. Click it right now, and I will show you how the whole machine fits together. And if you want the attorney's view on building real wealth, subscribe. Because most of this is hiding in plain sight, and nobody is showing it to you.